Gold, often referred to as the yellow metal, has been a symbol of wealth, power, and status for centuries. From ancient civilizations to modern times, gold has played a significant role in shaping the global economy. Despite the rise of fiat currencies, digital assets, and other investment instruments, gold's value and relevance have not diminished. In fact, gold is more valuable than ever now, and here are some compelling reasons why. Gold has long been recognized as a store of value, a hedge against inflation, and a safe haven asset. As the global economy navigates through uncharted waters, gold's value as a store of value has become even more critical. Central banks, individuals, and institutional investors are flocking to gold as a way to diversify their portfolios and protect their wealth from the ravages of inflation. The current economic environment, marked by record low interest rates, fiscal deficits, and unprecedented monetary stimulus, is creating an environment ripe for inflation. As the supply of money increases, the value of currencies declines, and gold's value increases. In an era of fiat currencies, gold's value is not tied to any particular currency or government, making it an attractive option for those seeking to preserve their wealth. Gold's low correlation with other assets, such as stocks, bonds, and currencies, makes it an attractive addition to any investment portfolio. As markets become increasingly interconnected and volatile, investors are seeking ways to manage risk and protect their wealth. Gold's ability to act as a diversifier, reducing overall portfolio risk, is a key factor contributing to its increased value. According to a study by the World Gold Council, a portfolio with a 10% allocation to gold would have provided a 10% to 20% reduction in risk over the past 20 years, while also enhancing returns. In an era of heightened market uncertainty, gold's diversification benefits are more valuable than ever. Central banks, which were once net sellers of gold, are now net buyers. According to the International Monetary Fund, IMF, central banks have been increasing their gold reserves at a pace not seen since the 1970s. This shift is driven by a desire to diversify their foreign exchange reserves, reduce dependence on the US dollar, and hedge against potential currency fluctuations. Institutional investors, such as pension funds, endowments, and sovereign wealth funds, are also investing in gold. These investors are drawn to gold's long-term store of value, liquidity, and ability to provide returns uncorrelated with other assets. The increasing participation of these investors has contributed to gold's value and relevance in the modern investment landscape. Gold's value is not solely driven by its investment appeal. Jewelry and industrial demand for gold remain significant, with Asia, particularly China and India, driving the growth in jewelry demand. The increasing popularity of 3D printing and nanotechnology has also led to a rise in industrial demand for gold. Gold supply is limited, and the rate of discovery of new gold deposits is slowing. According to the World Gold Council, the total gold supply is estimated to be around 193,000 tons, with only 3,000 tons of new gold discovered annually. This supply constraint, combined with increasing demand, has put upward pressure on gold prices. Gold recycling, which accounts for approximately 30% of total gold supply, has become increasingly important. As the price of gold rises, recycling becomes more economically viable, and the industry is experiencing significant growth. However, the rate of recycling is limited by the availability of scrap gold and the efficiency of recycling processes. The rise of cryptocurrencies, such as Bitcoin and Ethereum, has led to a new era of digital gold enthusiasts. While cryptocurrencies have their own unique characteristics and use cases, they are often compared to gold due to their store of value and limited supply. The growth of the cryptocurrency market has, in turn, increased interest in gold, as investors seek to understand the similarities and differences between these two asset classes. Gold's value and relevance have not diminished in the modern era. In fact, gold is more valuable than ever, driven by a combination of factors, including its store of value, hedge against inflation, diversification benefits, and increasing demand from central banks, institutional investors, jewelry, and industrial sectors. As the global economy continues to evolve and uncertainty persists, gold's value as a safe haven asset, store of value, and hedge against inflation will only continue to grow.